OECD's latest Economic Outlook, indeed the last press conference on the Economic Outlook by Mr. Gurria as Secretary General. Mr. Gurria will make a short presentation, followed by a presentation by the Chief Economist, Laurence Boone, and then we'll be able to go to some questions which you'll be able to do via the chat function on the Zoom platform. Also, I'd like to point out really that there's plenty of material on the website, lots of data, lots of analysis that you're welcome to use. With that, I'll hand the floor over to Angel Gurria, the OECD's Secretary General.
Ministers, ambassadors, colleagues, dear friends, it's a pleasure for me to join our chief economist this morning to launch our economic outlook. This is the OECD's flagship report, widely disseminated and debated around the world. In my memories of these past 15 years, numerous launches of economic outlooks, I'm reminded of the profound changes and disruptions which affected the global economy. For instance, the digital revolution, which transformed the way we live, the way we work. In 2006, only 1/6 of the global population was using the internet. 1 out of 6. Today, 3/5, which amounts to around 4.7 billion people connected to the internet.
Another ongoing process of huge consequence has been climate change. The OECD has consistently sounded the alarm and put forward recommendations for decarbonizing our economies. And even if the situation remains deeply worrisome, tangible progress is being made. Most countries, including almost all OECD members, have committed to achieving net zero emissions by mid-century. And at this Ministerial Council meeting, we're launching the International Programme for Action on Climate, the IPAC, to help them in this endeavor. But of course, it is the big crises that come to mind. The global financial crisis in 2008, which resulted in a permanent loss in global GDP per capita of 3%. And now, for more than a year, we find ourselves in another, even larger crisis. The ongoing COVID-19 pandemic is a health crisis on a scale not seen since the flu of 1918. Our 2020 Spring Economic Outlook was right. Our chief economist was right to predict that there could be more than one wave of the pandemic, which has raised unprecedented challenges for both health and economic policies, and has reminded us that it is futile to distinguish between the two. Lives and livelihoods is not a choice, not an option. The best economic policy is to defeat the virus. And today, mainly through vaccination. Fortunately, we all learned from the lessons of the global financial crisis. Central banks discovered the firepower available to them in the form of quantitative easing, and they have deployed it massively. Governments have learned of the dangers of tightening fiscal policy prematurely as the economy begins to recover. They also learned the utility of tools such as job retention schemes, which have been widely and effectively used in this crisis. Moreover, there's also been a greater appreciation of the distributional effects of economic crises. OECD research has shown that it is the poorest that suffer the most. And thanks to these lessons, to all these lessons, things have gone better than we initially feared. Output losses have been lower and unemployment has not risen as much as we projected a year ago. Now, this is due to the unprecedented level of macroeconomic policy support some countries have deployed. Moreover, governments have taken impressive actions to support those on low incomes and mitigate the impact of the crisis on the most vulnerable. These policies, together with the rollout of vaccines, are also reflected in our upgraded projections for future growth. We now see the global output for 2021 rising by close to 6% and nearly 4.5% in 2022. In a few countries, including the United States, we now see the level of GDP at the end of 2022 being higher than the one we had projected before the pandemic struck. And this is a testament to the strength of the policy responses. I'm heartened that many OECD members have announced plans not just to provide stimulus, but also to improve the sustainability and the quality of the recovery. Notably, the American Families Plan, the American Jobs Plan, as well as the Next Generation EU Plan. They're all important opportunities to tackle long-standing underinvestment, as well as the many social issues facing both the United States and Europe. The Economic Outlook only takes account of measures that are already adopted. So, the possible passage of measures like the American Jobs Plan is a source of upside potential to this outlook. Things could get better. Our ongoing work to develop a recovery dashboard of indicators will help us build forward better. We will ensure a strong, resilient, green, inclusive post-COVID-19 recovery. Chers amis, il faudra sans...
Dear friends, it will undoubtedly take many years to draw all the lessons from this pandemic. But some of them are already emerging. One of these lessons is that when faced with an international shock such as COVID-19, international cooperation has always been largely insufficient. The outcome is that recovery prospects are too uneven across countries. Be assured that as an international organization with cooperation and development in its name, the OECD will continue to defend multilateral approaches to end the pandemic across the world and better prepare for a similar crises in the future. I will now, for the last time, give the floor to our chief economist, Laurence Boone, to share with you the main messages from our economic outlook. Thank you very much.
Merci beaucoup.
Many thanks.
Good morning and welcome to the May 2021 Economic Outlook. As the Secretary General was saying, we've got some good news. The prospects for the global economy have improved considerably in recent months, and the outlook is brightening. So we have revised up our growth projections for 2021 to the highest growth rate since 1973. And that's thanks to progress in vaccination, economies coping better with restrictions, massive fiscal and monetary support. However, the health situation remains highly uncertain. Not enough people are vaccinated, new outbreaks may emerge, and some activities and borders may remain closed. As we've called this outlook, this is certainly no ordinary recovery. So here you can see the size of the upgrade. The orange line is our current projection, and it has moved up significantly compared to December, which is in purple. We now estimate the global income loss of the pandemic will be $3 trillion by end 2022. This may sound a lot, it is a lot. It's about the size of the French economy, but it's about half what we were expecting back in December. And you can now see it in front of you. The field of greens represents significant upgrades for countries all around the world. This major improvement reflects faster rollout of effective vaccines for some countries and massive new fiscal stimulus, in particular in the United States. Overall, we have revised our projection for the world economy to nearly 6%. It was 4.2 in December. That's a massive increase, but as you can see here, the recovery across countries is very uneven. Look at the chart and look at the dotted lines. That shows where we are today. So on the left, you can see the countries which are already back to where they were before the pandemic. Then there's a big group of countries in the middle, and for them it will take roughly an additional year to recover. And on the right, there are some emerging market economies, and they're expected to take almost half a decade to reach their pre-pandemic per capita income. So the main reason behind the divergence is first and foremost the health situation and its management. Here you have an example of job postings for different countries with different health experiences. So what do they show? For all economies on this chart, job postings in production and manufacturing, which is on the left, are now at or above pre-pandemic levels. And that's because their activities were much less affected by restrictions. In hospitality and tourism in the middle, and retail on the right, what's very striking is the US economy in blue is recovering better thanks to speedier vaccination. The European countries, by contrast, which were hard hit by the virus and maintained tighter restrictions longer, started their recovery with a delay. But what's very striking as well is they're catching up very quickly as vaccination accelerates. And that brings me to how economies reopen, which also explain divergences. I think this chart is very telling. You can see how the revival of trade as economic activities restart is uneven between goods and services and across countries. As economies went through the crisis, restrictions on high-contact services like tourism or events persisted, while at the same time, increased needs for IT material, health products have boosted demand for goods. And this spurred manufacturing activity, and global merchandise trade rebounded strongly That's on the left. This large pickup in merchandise trade is especially benefiting countries heavily involved in the supply chains of manufactured goods. For example, pharmaceutical and medical supplies with Ireland, personal protective materials for China, and IT goods for Korea. By contrast, and that's the right-hand side, services remain impaired, and that's especially penalizing countries that rely on high-contact services such as tourism or travel. All this shows that while recovering, the global economy remains vulnerable to risks. So let me start, Let me start with the first and main risk, and that remains the virus. First, we all face higher risk of new waves of the virus. Second, many borders could continue to stay closed, further hampering trade, tourism, investment, and ultimately jobs. Another risk is inequality. So the recovery is not only very uneven between countries, across sectors, but also across people. And you can see that employment here on the chart in high-skilled occupations, in red, grew in most countries in 2020, in spite of the crisis. But employment in low and especially middle-skilled jobs was shrinking, and this trend is happening everywhere. That's a threat to the most vulnerable people, and ultimately it's a threat to the sustainability of the recovery. Excuse me. Now, that's because I'm reaching the most debated risk, which is probably inflation. So far, reflation reflects mostly an imbalance between the demand for goods, which as we've seen, has surged with reopening, and supply, which has been and in many instances remains constrained by restrictions and disruptions, including in transport. And you see on the left merchandise trade surging with reopening, and that is pushing up sea freight costs on the right-hand side. As economies will reopen, we will see more surges in demand, and supply may take time to adjust. And that will push up prices in those sectors. So far, this has mostly only happened for goods, but this may also be the case for services when they reopen more broadly. And these disruptions may last until we reach a cruising speed on both demand and supply. Finally, another risk, which you can see here, is the pile of debt on the corporate side, shown in red. Much support was provided to firms, and that's welcome. A large part of this support was in the form of debt, and that may be less welcome. Heavily indebted firms may struggle. A wave of bankruptcies if support was withdrawn too quickly, or too many zombie firms if support is unduly prolonged. Both would be a very serious risk to the recovery. Now, to sum up on these risks, I have mentioned quite a few downside risks, and you can see their effect on the red dotted line, but things could actually also go better. If vaccination speeds up, if people spend more of the savings accumulated during lockdowns than what we have embedded in our projections, then growth could be stronger, and that's the green line. Which brings me to policies. So I think you've heard it from me, and not only from me, before, but the best policy to boost the recovery and to reduce divergence across countries is to tackle the virus as fast and as widely as possible. And we need to collectively help emerging market economies more, boosting the production of vaccines, improving health infrastructure, and testing capacities. Now, let me pause here for the minute, and let us be realistic. Intellectual property waivers may help the supply of vaccines, but not in the short term. And what we need is sufficient global production capacity now. Now, for this, the priority is to remove barriers to production. It's licensing production sites and transferring technology faster, and to remove trade barriers to the distribution of excess vaccines, but also components to make and administer the vaccines. So that brings me to the much debated inflation, and I talked about those risks earlier. Now, for inflation to persist broadly and widely, we would need a sharp and broad increase in employment. However, we think the job recovery may take some time, and you can see that on the left-hand side. And that sectoral bottlenecks should ease as the recovery normalizes. For these reasons, we think the spike we currently observe should decline in 2022. This suggests we should take care when interpreting short-term development in inflations, but we should remain vigilant and keep calm. That said, policymakers have a role to do. They can address those sectoral bottlenecks, including trade or other policy barriers, so that production capacity can be fully restored as fast as possible. And that brings me to the evolution of government support policies, and this will be my last slide. So as I mentioned before, this is a very unordinary recovery, and the policy responses have been and need to continue to be quite extraordinary. So let me be clear. Today what we need is fiscal support, and we should start to prepare a deep revamp of policies. So we can distinguish three phases. And you can see emergency, where there was blanket support to firms and people that was warranted, and we're hopefully emerging from this. Then transition, and that's where most OECD countries are now. Policy support to the transition should be as complete and effective as the protection of firms and jobs has been during the emergency episode. That means it's not the time to remove support, but it's time to shift to better targeting and to quality investment. In this phase, there should be, therefore, no overall spending cut or tax increases until full or close to full employment is restored. Which brings me to the third phase, when economies will be back at or close to full employment. And that's probably where we need to see the most extraordinary change in policy, especially budgetary. So every country is different, and there's no one-size-fits-all policies, but let me give you a few guiding principles. Everywhere governments will have to address new and existing challenges: aging, low productivity growth, digitalization, and climate change. And there's no magic recipe, but a combination of public investment with structural policies to lift medium-term growth and employment. And everywhere, there's a huge need to review the composition of spending and the tax system to address growth and inequality. This is certainly no ordinary recovery, and we cannot afford to go back to an ordinary policy framework. Hard work for better design, more transparent, more collectively owned structural and budget policies can make a huge difference in the post-COVID world. Thank you.
Thank you. We now turn to the questions. Can I just remind the journalists who have tuned in to mention their media as well. While we wait for more questions to come in, we have one from the Yomiuri Shimbun in Japan. Could you give some deeper analysis on the situation of the Eurozone and the UK?
So I'm not sure what is meant by deeper analysis on the Eurozone and the UK. But what I can say is that as the vaccination is accelerating in both areas, we are seeing a strong pickup in economic activity. That's very visible on the retail side. Production and manufacturing had started earlier. Obviously, tourism and hospitality remain hampered by borders still being closed. And I think that's a renewed call for vaccinating faster and more broadly across all of Europe. Also, this is probably also related to some work that we are doing in various international organizations and at the OECD on the so-called health passport, or a blueprint to ease cross-border travel very soon.
We have a question from La Gazette in Senegal. What does your outlook say about emerging market economies, and how concerned are you?
So we are very concerned that there's a lot less vaccination in emerging market economies at the moment. And the first thing that we want to say to government is actually to speed up the production and speed up the distribution of vaccines towards emerging market economies. And hopefully this starts happening. The second thing is, obviously there was less fiscal and sometimes monetary policy support in those economies. There's less capacity, which is why it makes getting out of the health crisis quicker essential. Those countries cannot take up a lot more pile of debt. That makes them too vulnerable to what's happening elsewhere.
South China Morning Post, what about financial market risks? What do you see as the main risks in the financial markets?
So, as I've said before, the inflationary pressure should be temporary, but we are looking very carefully at what's happening there. And as much as we think this is at the moment disruptions between supply and demand, one thing which makes us a little concerned is if financial markets have more volatile reaction, because that would have an impact not only on interest rates in advanced economies, but also with spillover for emerging market economies and capital flows.
This is from William Horrobin from Bloomberg News. You warn the recovery is uneven. Beyond the difficulties for the countries that are left behind, what are the risks for sustainability of the global recovery if the disparities deepen?
So there are two things. The first thing is, and I think one of the slides was very clear, faster vaccination means reopening and catching up fantastically. But that you can see very well on the charts I have shown. So the first thing is about this. It is possible to actually close the gap with faster vaccination, but not only. The other thing is there will be a reallocation of labor and capital from activities that we turn out to do less during the crisis and that are picking up post-crisis. And for this, we will need very targeted support, sometimes accompanying people better into job transition, and also helping the firms to restart with as good as possible balance sheet to be able to invest and employ people fast. And also, we need to make sure that trade barriers which have continued to accumulate during this crisis actually disappear, because that's key for emerging markets to participate into the global supply chain, which is for them crucial to catch up with advanced economies.
There's a follow-up question from Bloomberg. You talked about reforming fiscal policy. Can you be a little bit more specific about that?
Yeah, so I think this crisis has shown that we were not fully prepared for what happened first. So we need to better plan for being better prepared for another time, and that means improving on health and education. That's the first thing. The second thing is also that we know there are these long-term existing challenges I was mentioning. It's climate change, it's digitalization, it's aging, and it's low productivity growth. And that needs a bunch of things. It requires, some public balance sheet, but also reforms. What I'm trying to say is that the issue is probably not so much a COVID-related debt issue. It is an issue for most countries that predate the COVID crisis. Most countries need to reform their public budget policy management to make sure that they have enough room in the future, not only for cyclical stabilization, but also to address these new challenges. So that means reviewing spending priorities. It means reviewing the tax system, making sure it's providing incentives where it should, and it's progressive enough where it should as well. But no country is like another, so this is very country-specific as well.
And to follow up on those points that you were making, there's a couple of questions on both tax and the debt. I've got a question from Todd Boyle of Law 360. How do you see the global tax talks on the two pillars evolving in the coming weeks? And what difference would a tax deal make on the global outlook?
So as the question highlights, the global talks are ongoing. They've taken a new impetus, and we will let the people negotiate where this is landing to.
Just to add that there's been a 180-degree change in the position of the United States, which has made it possible to think of the outlines of a deal by next July, when there's going to be a G20 meeting of finance ministers and central bank governors. And to the extent that there may be a need to legislate in some countries, including in the United States, then maybe the final package could be taken to October, when there's another meeting of the G20 finance ministers and central bank governors, but all in time for the summit to give its blessing to the final deal, the final negotiation, and then to go into an implementation mode. But certainly we believe that the very, very hard work of the 143 countries that are involved here, all on an equal footing, together with the teams at the OECD, which is acting as the support system and the secretariat. I think we have a deal in sight, and hopefully it'll happen this year.
Christian Schubert of Frankfurter Allgemeine Zeitung. In which year, more or less, should European companies start to tackle debt? And how high do you judge the risk of so-called zombie companies slowing down growth?
So I think there are a couple of things on for firms to do and governments to help at the moment. The first thing is obviously, as we were saying, there's been a lot of debt on the corporate side, and as the recovery evolves, the support needs to be better targeted towards the sectors which remain impaired. The second thing is for big firms, I think we'll find it's sort of easier to increase equity and to the expense of debt. But for smaller firms, this can be an issue. So there are two types of things which are super important in our view. The first one is for those firms which are viable to actually swap debt into quasi-equity instruments. And that can be deferred taxes, it can be grants, it can be other tools. And obviously, banks can help screen which firms are viable. That's the first thing. The second thing is for those firms which are not viable, we have been recommending, I think, for quite a while to reform insolvency processes. But I think in this particular instance, it's of the utmost importance that countries, and some have started to do so, have a fast-track process for restructuring the small firms. Otherwise, we will have, too many firms going into bankruptcy standard processes, and it will turn out to be liquidation because that will be easier to deal with. So it's super important to reform the restructuring process to let firms and their CEOs start afresh.
Richard Io of Les Echos, how do you explain the fact that the European recovery is far much less than the US one?
So the recovery in Europe, as I was saying, was catching up with the vaccine, but I think we have to take into account first, European economies were very hard hit and very early in the pandemic. Second, they started vaccinating later, so they had restrictions longer. And the third thing is, I think, you know, there is one instrument we haven't talked enough yet so far. Let me say two things. The first one is Europeans have reacted very swiftly and massively in this crisis. They've learned the lesson from the financial crisis. We've seen massive, you know, fiscal support, lifting the EU rules on state aid and on budget, and very swift monetary policy action. Now we have Next Generation EU, which is this common fiscal capacity, and that's very new in this crisis. It's just been widely approved by the EU. They can start now raising money. What's super important to reduce the gap with the US is that the implementation of the investment plan with Next Generation EU be swift, that it goes to climate, that it goes to digital as planned, and that it goes into productive investment that lift potential growth and rapidly.
There's a number of questions for individual countries. This one from the Spanish agency EFE, Angel Calvo, who's asking about the tourism sector. He asks, pour les pays très dépendants du tourisme.
For countries which are very dependent on tourism, such as Spain, will loss of income be permanent? Will there need to be a reskilling and major changes for people working in this sector? Now, it's true that for countries such as Spain, which are heavily dependent on tourism, almost at 10% for a Spanish GDP, these losses are massive. Now, will these losses be permanent? It's too early to tell. I think we need to be very careful for workers under a part-time contract or job retention schemes, retraining, reskilling into other sectors is necessary when possible. And in other cases, the sector, this industry needs to be supported through hardship. And once borders are reopened, workers and capital need to be re-affected into other sectors.
Valor économique, some indications about the situation in Brazil.
So Brazil has been particularly affected by the management of the virus, and it has provided also very swift and important fiscal support, including to informal workers, that has been appreciated. But obviously, the fiscal space in Brazil is not as large as what it is for other advanced economies. And we had been discussing before this pandemic many times how Brazil needed to regain some fiscal space with actually a better and more transparent budgetary framework. And I think, you know, by anchoring medium-term expectation that policymakers will reach this stage, then that would provide them the space they need now to actually continue fight the virus, protect people, and get back to work very quickly.
Peter Ryan, ABC Australia, asks, Australia has so far avoided the worst of the pandemic with lower infections and deaths. But are you concerned about complacency in Australia, given the current lockdown in Melbourne?
I'm surprised that somebody calls a lockdown complacency. No, I mean, Australia, like New Zealand and many Asia-Pacific countries, have managed very well the virus very early in this crisis. Now, it's also the case that in many Asia-Pacific countries, there's not enough vaccination. And I think the lockdown that you're mentioning is a recall that, you know, everything needs to be done to speed up and vaccinate more broadly and more widely. That's the way to get out of this crisis.
There's a question about the impact of a stock market correction on economic systems. Could you comment on that likelihood or possibility, or what's likely to, how do you see that?
So as I said before, one of the things that we're closely following is inflation development and what that means for financial market. And one of the things we definitely look at is whether financial market reacts abruptly and with a lot of volatility to inflation number. That's not good. It's not good for stability. It's not good because it undermines confidence. So we should be following this.
A question about patents from L'Opinion. quelle sera l'importance de la levée de brevets?
Which will be the scale of the patent waiver and its impact on the recovery? I think the correct question is what should be done today to vaccinate more people more quickly. And what needs to be done to vaccinate broadly and quickly is increase production capacities. And in order to do so, bottlenecks need to be removed. There are licenses that need to be eased on opening up production capacities, on opening up technology transfer. There are still bottlenecks for vaccination production, for vaccination exportation, which needs to be facilitated and eased, including on medical vaccination equipment.
I think the right question is, what do we need to do to actually get as many people vaccinated as fast as possible? And what we need to do for this is first to increase production capacities. And there are a number of production sites waiting for official licensing. And that should take place faster. The same with the transfer of technology that could go with it. And we should actually remove the barriers that prevent excess vaccines in some countries for flowing to those countries that really need vaccine. And that concerns vaccines, but also the components of vaccines, liquid, syringes, anything you can think about.
There's a follow-up question from l'Opinion. Pensez-vous que cette prévision est moins...
From l'Opinion, do you think that your upgrade to the outlook is less uncertain than before, than the previous ones? Now, I think our crisis is out of the ordinary and the recovery is as well. We need to be very modest regarding our outlook. Uncertainties can be on the upside, on the downside. There is a rebalancing towards the upside, which is good news, but there are still many downside risks. The health situation is still not fully resolved. There are also issues with debt, with labor and capital reallocation, which can still be a source of disruption, and global trade is still a source of uncertainty, as well as inflation.
This recovery is absolutely no ordinary. There were a lot of extraordinary measures, and the recovery itself is extraordinary. I would say in English that, closing down an economy was the nearly easiest part to do. Reopening the economy is a lot more complicated. But on top of this, the health situation needs to be addressed, right? The variant's still circulating. That's a huge uncertainty. And we have other uncertainty, the speed at which people can get back to work or capital can be reallocated to new sectors, the bottlenecks that we are seeing between supply and demand and trade, and how that is weighing on inflation. So extraordinary recovery, perhaps extraordinary humility for economists doing projections.
Perhaps just to wrap up on a more positive note, positive question again from Les Echos in France. What could be the surplus of growth in 2021 or 2022 if households spend their savings?
So it's true that in these projections we have been pretty conservative with the use of saving, and we have assumed that excess savings would dissipate very, very slowly, and people could actually spend some saving a lot faster. We saw that in Q2 last year when people were spending a lot more than what we had expected, in which case that would push growth. To give you an indication, we think that about 1/10 of all these excess savings being spent, in addition to what we have in the projection, would result to about 3/4 of a percentage point of growth. So that's significant.
Thank you, Laurence. Thank you, Secretary General. I think we'll end the press conference there. Just a reminder that all the information is on the website. There's plenty of graphs, there's plenty of data, there's plenty of analysis. Thank you very much, and have a good day.
Thank you.